Hi, I'm Hong Kim, and this is PwC's Tax Insights in Brief. In our first quarter newsletter, we discussed a number of recent developments and guidance on tax accounting methods and energy credits. These topics include final regulations under Section 52, a new revenue procedure on annual private letter rulings and accounting method and period change procedures, guidance on changes in annual accounting periods of Section 6417 applicable entities, and process units on identifying and examining partial building dispositions. First, Treasury and the IRS recently issued final regulations that expand the constructive ownership rules under Section 52 to include businesses indirectly owned through non-trade or business units. The aggregation rules under Section 52 have a profound effect on many aspects of federal income tax provisions, such as the Corporate Alternative Minimum Tax, or CAMT, the Small Business Taxpayer Exception for Section 163J and UNICAP, and the eligibility for the use of an overall cash method of accounting. The final regulations are effective for tax years beginning on or after January 1st, 2025. Next, Revenue Procedure 2025-1 provides updated annual guidance on procedures for requesting letter rulings and changes in accounting methods and periods. This revenue procedure is effective for all requests received by the IRS on or after December 30, 2024, although the higher user fee specified in the revenue procedure apply to requests submitted after February 1st, 2025. Lastly, Revenue Procedure 2025-6 sets forth the exclusive procedures that allow certain exempt organizations under Section 6417 to change their annual accounting period. The revenue procedure is effective for changes in annual accounting period of applicable entity for which the first effective year begins on or after January 1st, 2024, and the period for filing the Form 990-T for such year has not yet expired. President Trump signed a regulatory freeze review executive order that may lead to delays in the finalization of proposed regulations in areas such as Section 174, certain Inflation Reduction Act tax credit, and CAMT. This may leave taxpayers and practitioners uncertain how to interpret statutes and apply complex regulations and whether their issues will be addressed in a timely manner. Companies should consider the impact of recent IRS guidance and changes on requests filed with the IRS National Office. They also should be on the lookout for guidance coming out of the Trump administration once the regulatory freeze is lifted. The recent expected terminations of the IRS personnel could have a ripple effect on the business community at large. The staffing and funding cuts could have a significant impact on taxpayers that rely on the IRS as a partner around compliance to reduce back-end controversy. For more details, read the attached insight. Thanks for watching. This has been PwC's Tax Insights in Brief.